Let's start off with Tax Talk with Tax Guru. Here, the guru is CPA PC Mr. Vikas Garg, who hails from Ashburn, Virginia. Let's see his take for this week.
Good morning, DC. As the new section 199A has arrived, many of you might have questions whether I should keep proprietorship or I should change to S corporation or C corporation. Today, we will discuss what is the best option if you are a proprietor. So let's say if your income is below 315,000, if you are married filing jointly, or 415,000 or below, then you are still okay. But if you are high net worth people, if you are married and your income is above $415,000 or more, you are out of favored specified service rate, then self proprietorship is not a good idea for you at all. Today we will discuss what is the best option. Simply, if you currently file as a Schedule C taxpayer and or you receive a 1099 or you have a single member LLC, then you may be qualified for 20% tax break allowed by section 199A if your business and taxable income are just right. But if your income is too high and you don't have any payroll or you don't have any depreciable property, then your section 199A deduction is 0. What creates a problem? Why I am saying it's 0? Simply, to qualify the full 20% deduction on your qualified business income under new section, your income should be less than 157,500 if you are single or less than 315,000 if you are married. If you are more than $415,000 if you are married, then your section 199A deduction is limited to the amount we have wages. It's a formula there. So let me just discuss one simple example. Let's say if you are proprietors and you are generating a $400,000 of proprietorship net income, and let's say after mortgage interest and all other things, let's give a say ballpark number, your taxable income is $370,000. In that scenario, your 199A deduction will be 0. Yes, it will be 0. Can I still use it? Answer is yes. If you can opt for the S corporation or you convert your proprietorship firm, single member LLC into a S corporation, then yes, you can still get the best deduction of 20% under section 199A. Question comes, how do I convert? Simple thing, you just need to file form 2553S form to IRS and it will be converted into S corporation. So let's talk about simple thing. So let's say your income was same $400,000, you convert to your LLC into a S corporation, then you can use S corporation to pay you a reasonable salary. Let's assume you have set up your reasonable salary as $100,000. So when you set up a $100,000, there will be two savings. First, a saving on your self-employment taxes. Second, a saving on section 199A deduction. So as a proprietor, when you have $400,000, your self-employment taxes will be $26,634. When under the new formula, when you take the salary of $100,000, your self-employment taxes will be $15,300. That itself will give you saving of $10,834 in payroll taxes. That's the first benefit. Second, now you are converting it to S corporation. How the S corporation section 199A deduction will work? First, we are going to take 50% of your salary. How much is your salary? 100,000. We are taking 50,000. Second formula, 20% of qualified business income. your initial income was $400,000. You took the salary out of $100,000 plus some payroll taxes. Then your profit will be around approximate $290,000 or $292,000. That's 20% of that profit will be close to $58,000. Then you are comparing $50,000 versus $58,000, whichever is less, that will be your section 199A deduction. So how much will be my saving? So your saving will be 17,500 because your 50,000 deduction goes about 35% tax bracket. So simple thing is you saved around $10,000 on the self-employment taxes plus $17,500 on the section 199A deduction. How much is total saving? 28,000. So simple thing is, if you convert your proprietorship firm into S corporation, you are saving a lot of money. 28,000 is a lot of money. If you factor your tax 28,000 divided by 400,000, we are saying you saved 7% tax. Yes, it's just making a right strategy bring you down by 7%. It's a jackpot. I just want to make sure every taxpayer use if they have a high net worth. Second thing, if you're just asking my income is not that high, I'm below 27,500 or below $415,000. Do I need to this? Answer is, if you are getting a 1099 or Schedule C income, you don't need to worry about section 199. You can still go ahead and claim it. There is no rules which restrict you with the W2 salary. So the new 20% deductions are for. Is there any limitation for section 198 or everybody can claim it? Answer is, there is only few specified services what we talk about out of favored services. They cannot claim this section 199A deduction. Who are they? All architects, CPAs, tax preparer, doctors, all those people fall under section 199A. They are not able to claim it if they are high net worth income. High net worth means if their income is above 415,000. If I am a CPA, I am a tax preparer, I am a doctor, I am a lawyer, I am an attorney, can I still claim it? Answer is, if your income is below the threshold amount. Again, the threshold amount is $415,000 for merit filing jointly and $207,500 for single filer. If you are below this threshold, there is no rules, you can still claim it under Schedule C, under S corporation or any corporation. So there is nothing is there. Next part, many people talk about, can I convert this corporation into a C corporation? Will it help me if I am a low income or high income? C corporation answer is, it's the same rules will apply whether you keep as a S corporation or whether you keep as a C corporation. Same rules apply for everywhere. So should I opt for the C corporation or not? There is a two factor you need to consider. First factor, how much section 199A deduction you will take. Second thing, you are going to pay double taxation on when you are talking about C corporation. The most important question everybody is asking nowadays, C corporation rate is reduced to 21%. Why still you are recommending for the S corporation? Why I should not go only directly to the C corporation? Answer is, we will discuss later about this, what is best, is a C corporation or S corporation, but this formula will always work on the S corporation. Second thing, when you are a high earner, 415,000 or more, can I still go ahead and what the best strategy I should use to reduce my taxable income? There are many things you need to consider before year end. If you are passing 31st December, you have the limited option. If you have to properly plan, properly estimate how much is your income, for the year 2018, how much payroll you need to run. So let me give you another example. So let's say your salary, your profit is $1 million and you are keeping your salary for only $50,000 or let's say $100,000. What's going to happen when you take section 199A deduction? We are talking about 50% of salary, $50,000. Then we are talking 20% of $1 million, $200,000. So you are going to take a minimum of $50,000 or $200,000. So you lose the chance. How to recover? Think this way. Can I bump up my salary in the form of bonus or can I pay some bonus to me? So let's talk about I paid the bonus of $180,000 to myself. Then how much my W2 will be? My W2 is $280,000. Okay. Then how much is my profit? Your profit is going to be close to $780,000 or close to $800,000. Depend, because when you pay the $180,000, you are going to pay employer part of payroll taxes and all other things. So on the rough side, for the calculation point, we just take 800,000 is going to be your new profit. So let's just talk about how much is my deduction. 50% of 180,000, that is 140,000. Second, 20% of profit, that is 160,000. How much is my deduction? Lower of 160,000 and $140,000. So my deduction will be $140,000. On 140, earlier you are getting a deduction of 50,000. Now your deduction is $140,000. How much is additional deduction? 90,000. When you are a $1 million income, what tax bracket you are? 35%. So 35% of $90,000. How much you are looking? $27,000 taxes. So you might pay little bit of payroll taxes, but your saving will be $27,000. That's correct. So before year end comes, before 31st December comes, make sure you estimate your W2, you do the reverse math and make sure you calculate how much is my 199A deduction. If your year end pass, you will not be able to claim. Second important thing, you cannot amend that W2 after 90 days. Means if your 31st December is passed, then you can do the W2 filing only up to 28th Feb. Any W2 file after 28th Feb will not be considered. So next time we will discuss about how the C corporation will work with the section 199A deduction. Thank you.